Hello and welcome everyone to the Veritaseum or VeriDAO YouTube channel. I'm your host, Jeff Pinnacle, and I am very pleased to be joined by our guest today, Reggie Middleton, the founder of Veritaseum. Welcome, Reggie.
Welcome.
It's great to have you here. I have to admit that every time I say the word "very," and even my phone does this, it always misspells it with the I. It's happening more and more. But I'm going to lead off with our first question today, and it's also going to include the word "very." So let's see how it goes. So it took a very long time, no pun intended, for you to obtain not just one but two patents, both in the U.S. and Japan. Congratulations once again. Now, the words and language are important, especially in legal documents such as patents. The specific language in the patent describes facilitating low trust and zero trust value transfers. Can you help our audience to understand that phrasing and its applicability not only to cryptocurrency projects, but other use cases throughout the world of finance?
An oversimplification and overgeneralization, which by definition means it's wrong, okay, will sound like this. You have, can you hear that dog in the background?
Yeah, they want to hear too. They want to know what's going on too.
If I need to go and silence him, I will. But you have a facilitator, and that facilitator can be a computer or a computing device, and that facilitator assists client A from moving value conditioned upon anything to client B without counterparty risk or credit risk, or with low counterparty risk or credit risk, and without the need of an authoritative third party. Now, a lot of people would say, well, is a facilitator an authoritative third party? And the answer is no, because a facilitator cannot block, prevent, or disrupt or contaminate the transaction. It simply assists, and that facilitator can also be a part of client A, a part of client B, actually client A, actually client B, or some other party. That's it in a nutshell.
That's a great
simplified. It probably sound, I think about it, still sounds a little complicated, even if you oversimplify it.
Well, I think any simplification helps anyone to understand, just to get their foot in the door to understand what's going on there. But I think that the value transfer is an important piece of that patent. But an interesting transition there is that the way that it applies to cryptocurrency projects in the world of finance. There's a lot of things that are going on with the world of financial technology, or Fintech for short. I've heard you describe Fintech that can be used as a weapon. Can you explain what you mean by that phrasing?
Okay, well, let's define weapon first. So a weapon is something, let's say an object or a chemical or a technology or a system that is used to bring harm to something or someone else. That's Reggie Middleton's, that's the Middleton dictionary, not the Oxford or Webster's dictionary, okay? With that being said, financial technology or Fintech has been weaponized to bring harm to another party. With the Russian invasion of Ukraine being a perfect example, financial technologies and financial systems have been weaponized against Russia. Perfect example is the global reserve currency, US dollar. And the weaponization, let's try and go through on a fairly accurate note. The weaponization is not the actual dollar itself, but the reliance of the world on the dollar to do international trade and business. Because the world relies on the dollar, that's why it's the global reserve currency. There's several reserve currencies that you put in, your FX reserve, but the global reserve currency is the currency that most global trade is denominated in. So if you want to buy oil is priced in dollars, not in rubles, yen, yuan, pounds, or euro. Gold, same thing, and almost anything of significant value that's traded globally. That being said, if the U.S. decides to exclude access to the dollar, or if the U.S. Wants to punish somebody, they say, well, if you're using the dollar, we can sanction you, which means you can no longer do business with these dollars. That punishes the recipient by excluding them from world commerce. Okay. Now, this happened before, but not to the extent, at least to my knowledge, that it has happened. Not to the extent that it's been done to Russia for right now. The biggest difference: the Russian central bank itself was targeted with sanctions. Okay. Usually, central banks are off limit and they sanction individuals or companies, or when they're really, really serious, actual countries such as North Korea, etc., or Iran. They target the actual Russian central bank. What does this mean? Well, the central bank is the bank for the banks, and it is used to backstop other banks. It prints currency, and since it prints currency, it has an unlimited reserve, basically an unlimited bank account. It makes money instead of having to earn money. Now, currency, right, is very different from natural value. So making currency is very different from making economic value. You make currency, and economic value means the same. You simply devalue each little currency bit, each ruble, each dollar, each yen, etc. What the U.S. did in concert with the EU was they targeted the central bank. They froze its assets, half of its current foreign reserve assets, which resided outside of Russia. And then by doing that, they took 50% of all the assets. They made it sanctions. That made it very difficult for it to backstop its banks. So when the banks get in trouble or there's a run on a bank, the central bank can't come print currencies and assist because half the currencies are locked up. In addition, these banks are in significant trouble, and the economy in general, because it's a global world, and no matter how powerful a country is, because of globalism, which is not a bad thing, okay, because of globalism, you have to do trade with everybody else. Without that, you have to be absolutely self-sufficient, of which I can't think of a single country that is. The U.S. is probably one of the, if not the most self-sufficient countries there is, and the U.S. can't do business without the rest of the world. So you have to think of what you have to be capable of to circumvent and survive this fintech attack, this economic and financial and technology attack. You have to be totally self-sufficient in terms of food. You'd have to have arable land. You'd have to have the livestock. You have to not need to import any foods whatsoever. You'd have to produce all of your own energy. That's electricity, oil, gas. You have to produce all of your technology. Okay, you have to manufacture all heavy and light equipment and devices onshore. Okay, and you have to be totally self-sufficient economically, which means you never have to borrow capital. Even the U.S. can't do that. Okay, by sanctioning Russia, Russia's airline industry or aviation industry has been shut down from an international perspective. They've also shutting it down from a national perspective because, they don't have control of airlines within or airplanes and the airlines within Mother Russia. These planes are no longer licensed to fly because they can't do business with the U.S. and the EU companies. So that means that whenever you need a new piston or a turbine or a wheel or any replacement part, you can't get it. So flying a plane through Russia, even if you're just going from one side of Russia to another, is very, very dangerous now. So I just heard that Russia is confiscating planes already in Russia, and it's most likely going to use them for spare parts. That only works but for so long. By the end of the year, what are you going to do? Okay. This is one sliver of the damage that is done by firing that fintech cannon. And I call it fintech, but it's really a global macro currency and fintech weapon all combined.
Absolutely. That's a great answer. I appreciate that. And that perspective is really powerful from someone who's run the Boom Bust blog and done so much with the financial world. But I'm curious about the economics in the world right now are certainly very fluid. And a lot of countries are becoming more nationalistic, as you're saying, and pulling back. There's been a movement either to explore central bank digital currencies CBDCs. Either the United States just announced that, or they've already started creating it as China has. So what's your viewpoint on CBDCs? I know you've been very active on Twitter, as you always are, talking about CBDCs, but what's your viewpoint on that, and how does it relate to Veritaseum as well?
CBDCs are just the next evolution in digital money. The US and I keep saying I hate using this term, but then I go ahead and use it anyway. Developed nations or economies have been using digital currency for since the early 70s, late 60s. Your bank account is digital currencies. Most people, when they say I have XYZ amount of money, they don't mean paper dollars or metal coins. They mean the ones and zeros sitting in their bank account. Of course, that is just a computerized ledger, a centralized computerized ledger with a database that says you have X, someone else has Y, you send capital to them, you credit their account X and you debit your account Y. Using the CBDCs, depending on how far they go along the distributed ledger technology route, how much they decide to adopt and how they adopt it and what they adopt, you get additional benefits such as built-in inherent audit trail, traceability, hopefully higher security. I don't think a lot of CBDCs are going to use asymmetric key pairs, which is a private key and a public key, which actually makes things a bit more secure than the way things are done. You hear about a lot of hacks in crypto, and that's simply not because of a weakness in the asymmetric key pair security model. It's the weakness in how people secure their own personal assets. You are given control of a private key. You own completely the risk and the assets and the liabilities of your particular crypto, your currencies, or your digital asset. And a lot of people are careless or don't read up on proper security practices, so they get hacked that way. That has absolutely nothing to do with the security of the system. I would wager, I haven't investigated it, but I'd be more than willing to bet that many more hacks happen with the centralized system than asymmetric key pair system. Primarily because you have one honeypot to attack. And if you break into that honeypot, you get to ride away with everything. Asymmetric key pairs, you literally have to hack each and every asymmetric key pair. You have to get to every private key. Much harder to do. Okay, that's like fighting a war versus one large Goliath or, 10 million mini Goliaths. And you have to get all 10 million of them to get the same amount of money to just attack and defeat one Goliath. So, but the media doesn't want to look at things from a forensic or factual perspective. They need the bigger story. I remember this when the internet came out and smartphones, etc. So everything's a boogeyman when it's unknown. It helps sell ad space and gather eyeballs. But back to the original question on CBDCs, you have the obvious privacy issues because the blockchain, if they use a distributed ledger, whether it's a blockchain or not, but it leaves a audit trail and the provenance, and that is rich in information, which you can use to cross-reference with all types of information. An example I used is, let's assume that Apple will kowtow to the government and other large technology providers such as Samsung, even though they say they don't or won't. I wouldn't bet my life on the government not having backdoors to these devices.
Sure.
Let's assume you have an Apple Watch and you use an iPhone and you're a health fitness freak, buff, not freak, sorry. And it tracks your heart rate and your blood pressure, GPS location, of course. It also triangulates location via Wi-Fi, Bluetooth, and a variety of other methods. And someone is accused of, say, robbing a bank or making a false transaction, a fraudulent transaction, buying something, selling something that they allege was not what it was. Okay, selling something that they purported to be something that it wasn't. Excuse my grammar. They can actually track you down to your specific location between GPS, Wi-Fi, and Bluetooth, okay, and triangulation of where you are on the cell network. They can figure out how much money you accepted and or gave for that object. If that object was digital on a blockchain, they can even track that actual object. Okay. They can measure your heart rate. So let's say, yes, I sold Bored Apes for more than it was worth, but I wasn't aware of it. And then the prosecutor says, but your heart rate spiked when you hit the button, according to your watch. Why is that? Just by cross-referencing all this data, which they potentially and actually have access to, depending on legal system subpoenaing, etc. That level of personal privacy breach is outrageous from our perspective. George Orwell had no idea what he was talking about in 1980 when he made that book. I don't know when he wrote the book, but the book was 1984, if I'm not mistaken.
Mm-hmm. Yes.
But if you take a look at what is capable now, Big Brother is more like the gigantic, gargantuan brother, because they have an eye and they can peer into all aspects of your life, from your heart rate and pulse to what you spend, how much you spent, when you spent it, your frame of mind spending it, at least from a physiological perspective, etc. And that's what we're looking at with CBDCs. Now, there's another side as well. CBDCs are one thing, but the private stable currencies are another. As long as there are no backdoors and tracing, and there's a decent amount of it, the most popular private stable coins, I think, are Tether and USDC, and they both have government backdoors. Not saying these are bad guys, because you can't really say no to the government safely. Okay? You probably can't say no to the government, period, but you will put safely on just as a legal disclaimer. If you use a stable currency that works, like an algorithmic currency, but again, that works. I'm not sure they work because they haven't really been tested, and a lot of them have failed to test. But this is an ongoing beta or alpha program. Then you have the ability to transfer stable value totally autonomously. That sounds like a very good idea. I'm highly in favor of that. You take an algorithmic stable coin that works, and that's a big, quotation, parenthetical, and you mix it with a privacy coin, the technology behind, say, Monero, etc., as long as it hasn't been hacked or broken yet, and you have the ability to truly transact value and stable value with a decent amount of privacy and security. You mesh that with the VERI's of Veritaseum's IP, and that is conditional transfer of value, and you have an entirely new way of doing things throughout the world with no barriers. Now, a lot of this runs antithetical to what the government needs, because the government needs to peer into transactions. They need to peer into this privacy. They need to tax. They need to do X, Y, and Z. So you have competing interests. But I gave you two examples of what the technology is capable of from the government oversight perspective. And I'm not knocking governments. If you ran a government, you would have to be inside everybody's business too, or your government will eventually fall. Or from the other side, the privacy, security, stable value transfer perspective of the individual corporate user, assuming good actors. And good and bad is a story for an entirely another video. Because remember, one man's terrorist is the next man's freedom fighter. So we're not going to get in good versus bad, but we're just talking technology for now. That was a very long-winded answer, but I think I covered both.
I appreciate that, Reggie. And if people see me go mutant now, I've got my own version of dogs outside that I'm just trying to mitigate here. So I really appreciate that answer. But one last economic question. Again, you've never been shy about talking about economics, going all the way back to your blog. But what's your outlook with all these different things that are all these different fluid situations? Where do you see like the economy for both the U.S. and also with the SWIFT system and like international trade? Where do you see the U.S. and world economies heading in the next year or two?
Well, that question is extremely difficult to answer empirically, accurately. But luckily, we're going about answering it. We have a sovereign risk model that we've created. It started with the FBI social ferment model, basically the likelihood of social unrest and people taking over the government. Okay. The model is actually fairly well done. It's done by FBI analysts and was used with the FBI. And we took it, we built upon it. strengthened it. We put strong forensic analysis, fundamentals, geopolitical risk is built in heavily, and global macroeconomics analysis. And it basically connects, I'd say about 40 different countries, doing things from jet debt to GDP, net debt to GDP, contagion analysis, contagion linkages, where the banking system is connected to the government, foreign debt, etc. I'd say hundreds of variables over 40 different countries, all interlocked. And that's being repopulated for today because it's a very, very interesting time. I think geopolitical and global macroeconomic risks are the highest now that they've been since I've been alive, that I can remember. I was probably alive during the Bay of Pigs, but I wasn't old enough to realize what was going on. But things are very, very high now. Interlinkages, linkages, and common liabilities, the likelihood or ability for a daisy chain, a domino effect, are higher now than they've ever been. And, I don't want to say tempers and temperaments because that puts a human characteristic in, but the likelihood for something to kick off even further is significantly high. If you take a look at China's threats going back and forth, then China likely looking to give help to the Russians, and the U.S. and the EU and the Brits are giving help to the Ukrainians, and fallout from a Russian default, whether technical or not. Apparently, Russia has claimed that they evaded default by paying their Russian interest due, but they paid it from sanctioned and frozen funds. And so they say it's up to the U.S. to release the funds. They say we have the money, right? It's just up to the U.S. to release the money. So they're trying to politically put the blame in the U.S. I heard that spokesman for the Treasury said the funds would be released, but the Russians misspoke. Okay, so if you had the money, then it's not up to the U.S. to release the money, right? And if it's up to the U.S. to release the money, then you don't have the money. That brings me back to this saying that I always favorite: if it ain't your keys, it ain't your cheese. So
yeah, that's a common saying in crypto. If you it's not your keys, it's not your coins. So, but I think that you have to have that perspective across the entire global market because there's so much going on right now, and it's always getting different perspectives. But one perspective that we certainly know that you have a stronghold on is what's happening with the Veritaseum Project. So it's just moving back to speaking about Veritaseum specifically. Since the awarding of the 2 patents, there's been a lot of activity. Can you give us some insight as to what the activity has been since the awarding of the patents, especially since the U.S. patent? Has there been contact with one or more of the potential infringing companies? And how has that communication and interaction gone so far?
Okay, well, I'll start back with the first award. That was Japan in very late 2020. And it was actually issued January 2021. From that date on, actually from October 2020 to now, to date, we've been doing basically analysis and study to show how complex and complicated the subject matter is. We wrote the patent. We invented the idea. And it took a year and a half of research and study to fully grasp the depth, the breadth, and the power of the patent. I doubt very seriously if anybody's put as much time and effort into analyzing as we have. And even if they did, we have a significant head start of being the inventors and authors of the actual document. So with that being said, we've contacted a few companies. We sent out notices to quite a few, okay, in various forms. I'll let you know in a secret. This new digital day and age is something that many technical, financial, and legal pundits are not fully grasping. You can send out notice via Twitter, okay, and there's precedent that backs that up. So we've sent out old-fashioned notices with letters, or we're sending out new-fashioned notices as well. Some of the notices are a little more maybe potentially in depth than some are used to, and some are in a different form, but they have been sent. We can't be a patent troll by definition. Not only are we practitioners in the space, we were the first practitioner, which is how we created the invention and filed for the patent protection application. But we're also very, very anxious to license, and or at least I am con litigation. I do not believe in litigation at all. It's not efficient. It's not timely. I believe often it's not effective unless you're a lawyer. But a few entities seem to be mistaking my ability to understand the time value of money, and they seem to be confusing that with weakness or a lack of ability to follow through with patent protection and litigation. That's not a very good idea. We've already have this funded, and we're capable of going all the way to the end with the largest entities possible. So let's not confuse my unwillingness or my not unwillingness, because I'm more than willing if necessary. Let's not confuse a prudent lack of preference for litigation with the inability to litigate. And hopefully we don't have to prove this, but if we do, then we'll be dancing. Let's dance. We have several small entities who voluntarily came up and looking to license. And I think with a little more information, this will creep up to larger entities. Unlike practically every single technology concern that I can think of, both in the crypto space and the larger space, we have a very, very, very strong financial analysis, investment valuation, and macro bent. We're very, very good at this stuff. And so we're creating reports that are both patent law, patent analysis, intellectual property analysis, and technological comment, and very strong on the financial analysis side. So Block is a perfect example of how we ran through. We did a report on Block. I think it's about 65, 68 pages, and it's ongoing, still developing. And we went through the history of Block, litigation history. We went in detail through the operation and financial model, and where they are infringing, and where they have issues in the past, and what the weaknesses are. We pulled out the Goldman Sachs credit facility that they have, and the Goldman Sachs credit facility made very clear that they weren't to have any cease and desist letters or any notices for patents, and that they had either ownership or license to any code or properties or assets that they use to do business. I don't believe that's the case with Block, and I can say that with authority. So you can read between those lines. Not picking on Block, but just an example. To Coinbase and JP Morgan and the big banks, Silicon Valley companies, etc. This level is very, very good. We're giving it away for free, and it is unmatched. Not only is it unmatched by both Wall Street and Silicon Valley, but also the content is unheard of. In a more efficient market, in a more efficient world, the entire crypto industry, financial industry, and technological industry should be blowing these servers up, trying to download this report. So if you take a look at what is actually happening, you're having very, very strong, powerful, large, and wealthy venture capital and private equity investors going into this space, making some very, very serious mistakes, investing through DAOs without any corporate protection, buying tokens that have no access to IP, no ownership to IP, and not even protection. So you have joint and several liability for everybody who goes into the DAO. You have massive intellectual property and patent infringement risk, massive. And then you have the typical risks that everybody just knows about, but still not enough people are protecting against, such as code and execution risk, hacks, small contract bugs, etc.
Wow, that's a great answer, right, Reggie? Now, given all that interaction, well, we've talked about the potential legal actions there, so I understand that it's a sensitive subject. So I really appreciate the candor there. But now going back to the patent definition, given the broad definition of value transfers described in your patents and its application into cryptocurrency, how much of an influence these two patents provide towards mining, staking, and DeFi projects? Does it apply to any or all of the above?
Well, the patent's definition of value transfer is actually very specific. I don't think it's broad at all. It's actually very, very specific. Trust me, the U.S. Patent Office fought me for many, many, many years. Like what, the closer part of a decade. Okay, so it's not as if I threw a piece of paper in the air and they're like, "Oh, okay, we're gonna sign it before it hits the ground." So it is quite specific. The issue is its specificity happens to be exactly where the industry is landing. Remember, I told you we're very good at finance and investment. This is stuff we know very well, been doing for a long time. Excellent track record, lots of strong positive results, proven in history. So this is not guesstimation or Reggie's ego. And I assume that this technology would be adopted by the financial markets and greater, broader industrial, manufacturing, and general business markets and services in general. And I was right. And so it's not so much that the definitions in the patent are broad, they're very narrow, but that narrow strip is where the industry is landing. And that's where the patent is getting its value from. Now, I have to go through each scenario and analyze it, but I know many proof of stake systems are infringing. Many blockchain systems that use transaction fees for compensation are infringing. Basically, whenever you have value transfer contingent upon a data feed or data using asymmetric key pairs, very strong chance of infringement. And that's where we have it. And that happens to be done in many mining systems and proof of stake systems and proof of work systems, etc. And when you go on to actual applications on top of these systems, you have additional infringement, such as swaps, such as decentralized exchanges, etc.
So I know
as well the transfer of NFTs.
Yeah. So it seems to apply to most, if not all, of crypto these days. So I know a lot of people are concerned about that are involved in the cryptocurrency space. But the question really goes back to my next question really goes to comparing the crypto industry compared to the legacy financial sector of fintech. Would you say that while it does apply a lot to the crypto industry or the crypto space, would you say that the applicability of the patents is much larger towards the traditional financial sector?
Significantly. Crypto is exciting. It seems like there's a lot of money in it, but it's only that much. The money, like if you want this, is the traditional financial sector. As the traditional financial sector adopts these technologies and business models or technology models, then they start adopting things that infringe on the patent as well. And so you can have one bank will probably one or two banks, say JP Morgan and American Express combined, probably have more economic infringement liability value at risk than the entire crypto industry.
Wow.
There are thousands, tens of thousands of banks in just the US. Okay? Thousands, if not tens of thousands. One or two banks outdo the entire crypto industry. So just put things in perspective. That's not counting the other very, very large banking centers in the world, like Tokyo, okay, or Beijing.
I think that perspective is very important, especially for people that are concerned about, what Veritaseum's influence in the crypto space. I think that the much larger piece of the pie is that the rest of that financial sector, as you described. So, but speaking of Veritaseum and the project, originally, when Veritaseum came out, there were 100 million tokens, but a particular government organization we won't really delve into today possesses roughly 98% of those. What's your interpretation of those tokens? And is it fair to say that the supply of Veritaseum is now just around 2 million, about 10% of Bitcoin supply? And is that enough to do and accomplish what needs to be done?
Okay, so I'm going to comment on that, but let me comment on the last comment you made before I forget it.
Okay.
Those who are concerned about Veritaseum's influence in the crypto community, you know, it's unrealistic and you're looking at it from the wrong perspective. You should always look at, from a business perspective, you should always look at how successful you'll be and not be concerned about how successful somebody else will be. Your success is not necessarily predicated upon the lack of success of somebody else. So we're, small business, a very small business entity. We came up with an idea, we patented it, we're executing on it. Crypto companies are not concerned about the success of Amazon when Amazon charges them AWS service fees to host their website. It's a non-issue, and they pay it without a problem, knowing very well if you do not pay Amazon for use of their property, you don't get to use their property. And Amazon will cut the switch just like that in 30 days. Not much of a grace. Okay?
Sure.
So why isn't anybody concerned about Amazon's influence in the crypto industry? And it is significant, by the way. If Amazon decided not to host or allow anybody in the crypto industry to host on their websites, there'd be a problem. Now, of course, everybody would probably end up moving to Google or Microsoft Azure or Oracle, but that's neither here or there. Nobody considers it because it's considered a simple cost of business. Okay. For whatever reason, especially in the crypto community, intellectual property patents are bad, but only bad if you don't get to use somebody else's stuff for free, right? They're good if someone wants to use your stuff for free because you don't want it to happen. This is a very childish way of looking at things, and it doesn't mesh with law. And that perspective is why there's so much inherent liability in these crypto projects right now, because they weren't realistic when they looked at IP, patent law, etc. It's time to get realistic because real money's starting to flow into the space, and it's time for everybody to go up and look at things from an adult business perspective. So unless you're planning on waging war against Amazon because you don't want to pay for your website hosting fees, just be realistic. Okay. Now, the 98 million tokens. It may not be a secret that I'm not a big fan of the SEC enforcement arm, at least the tactics that they use upon me and personally, my family and my companies. I signed a consent agreement giving up 98 million tokens. From my perspective, those tokens are gone. Okay. I don't believe, I'm not a lawyer, but I don't believe they could be unlocked without judicial decree. And so the SEC can't access them, only a judge can. And that would be irrelevant whether the SEC accesses them or not. The judge says yes or no, which I don't see the judge would ever say yes, but it's irrelevant. Those tokens' primary use were to purchase access to Veritaseum's intellectual capital, products, services, and intellectual property. Okay. I no longer want to do business using that method of payment. So those 98 million tokens are persona non grata. Period. Okay. And because almost everything that runs through blockchain, at least the blockchains I'm familiar with, are NFTs because of their traceman signature and the fact that if they're tainted, they would have less value than others. And then I can probably find out if anybody were to use those tokens if they were released. Okay. And that's a real time experiment to see if they truly are fungible or not fungible. Okay. And, Bitcoin is an NFT. You ask the people who allegedly hacked and tried to launder the Bitcoin taken from Bitfinex, or you can ask the people who donated Bitcoin to the Canadian trucker convoy movement after the Bitcoin got frozen. You ask them if their frozen Bitcoin is worth less or more than Bitcoin that can freely be moved and spent. The answer is no. And if one Bitcoin is worth less than another Bitcoin, then it's non-fungible by definition. Okay?
Yeah, that's a really interesting perspective. I've seen you speak about that recently. I know that I've talked to other people that have been involved and they've been miners of Bitcoin, and they would, like, for example, they would love to have the very first Bitcoin, for example. So there's different significance to different Bitcoin as you characterize. So describing it as an NFT, I haven't heard anyone say that before, but it makes a lot of sense.
Mm-hmm. Well, fungibility is fungibility. So a lot of people say they trace the Bitcoin through the addresses. It's irrelevant. If you look at the definition of fungibility, it doesn't name anything about the transport mechanism. Fungibility means if one item is totally and completely replaceable by another item without a change. You can't do that with frozen Bitcoin. Frozen Bitcoin is worth a lot less than unfrozen Bitcoin. If you don't believe me, I'll give you a bunch of frozen Bitcoin. You give me a bunch of free Bitcoin in return. You'll call it even Steven. Okay?
Absolutely. Well, you took away my thunder from my last question. My last question was going to be about Bitcoin and NFTs, but my last question for today instead is going to be this: is that, and I think it's a good way to conclude for today, is that recently the Veritaseum DAO, or the VeriDAO, was pleased to announce, with your permission, of course, that you're going to be accepting the VERI tokens as a discount mechanism. And you've always been a proponent of the VERI token holders, even when you wrote your response back to the SEC. So one question that I've heard people say is that they don't quite understand how that mechanism would work. How do you envision, or how would you describe how those VERI tokens might be used in the future to provide that discount for your IP?
Well, for right now, we're going to keep it relatively simple. I don't have the firm numbers in hand, so don't ask me for the actual math calculations, but because that has to be worked out. This is a new paradigm, new product, new patent, new intellectual property, new everything based upon a new platform with new technology. So everything is new. So don't ask me to give you an old answer, okay? But in a nutshell, if you use the VERI tokens to pay for a portion of the IP license, those VERI tokens will discount in excess of $1 worth. So you have a license that costs $10. Okay, you pay $15 worth of it in VERI tokens, or you pay $13 of it in VERI tokens, and you get a $15 discount. So your total purchase would be, I said $10, right? I'm sorry. The license costs $10. You pay $1.30 of it in VERI tokens, and you get a $1.50 discount. So you'll be 20 cents ahead of the game.
Yeah, didn't mean to put you on the spot to do real-time math there, but I get the mechanism certainly comes across. So, Reggie, this has been extremely informative. It's been a great conversation, as always, whenever I get the opportunity and pleasure to speak to you. I'm sure my audience agrees with that, so, and the audience of the VeriDAO. So on behalf of Reggie Middleton, I want to thank you for joining us today, and I wanted to thank our audience for being here today, and I hope that you join us again on the Veritaseum DAO channel. Take care.